Starbucks appears to be making some progress in its turnaround. Hello and welcome to The Week in Restaurants, a weekly discussion of the biggest news story of the week in the restaurant industry. I'm Jonathan Mays, editor-in-chief of Restaurant Business, and I am here with executive editor Lisa Jennings. Starbucks earnings came out this week, and it was a hefty dose of all sorts of things. We will discuss all of that, or as much as we can fit in the time allotted. Wingstop reported a rare decline in same-store sales. Is that a big deal or not? Later on the podcast, Joe Guszkowski gives us his technology thoughts. But first, Lisa, I hear you visited a certain restaurant last week. Tell us about it.
I did. So in LA, finally, the long-awaited Tesla Diner opened last week. And of course, this is, the Tesla company started by Elon Musk has been promising. They created this, it looks like a spaceship kind of thing. It's like the Jetsons kind of circular building in the middle of West Hollywood. And it's a charging station, supercharging station. So they have, I think, 80 superchargers there for Tesla drivers. And I think other cars can go there too, although I didn't test that theory because I do have an electric car, but not a Tesla. And the idea is you plug in your car, you go in, there's 2 huge movie screens. You can watch movies, sit in your car and watch movies if you want, or you can go in and get a meal. And they have grilled cheese sandwiches, burgers, hot dogs, that sort of thing. And it's all about Tesla. You can buy the merch. There are robots on occasion when they're working, serving up things, popcorn and things like that. And all the food is served in a Cybertruck shaped little cardboard box, which is, pretty adorable, you have to admit, which can also serve as a hat, apparently, according to social media. I did not try that theory, but
take the food out first.
I think it would be best to take the food out first. And I did not try. I missed a few things that weren't on the menu when I was there. I stood in line for an hour and a half to get in, by the way, which was annoying, but that's because Tesla drivers got priority. So you would stand in line and watch all these Tesla people walking in and think, gee, maybe I should buy a Tesla. So if you can remove the politics of it all, it's actually pretty fascinating just to see how you can, people talk about full brand immersions all the time. This is absolutely that. I mean, it's all about Tesla and Tesla fandom, and the movies would show Cybertrucks driving over beautiful landscapes, and it's kind of interesting just to see what they've done with the brand. And the food was good, I have to admit, but I thought it was too expensive. We'll see whether or not he does more. That's the big question.
You bought a $14 tuna melt, did you not?
Bought a $14 tuna melt. Now, the chef is Eric Greenspan, who's known for his grilled cheese chops. And, it was very good. It had a lot of fresh herbs in it. Had a lot of dill, which was very tasty. But it was just kind of a meager tuna melt sandwich in a box. I mean, the thing about the presentation is that you open the box and there's just there's no embellishment. There's no pickles. There's no nothing. It's just a box with a sandwich in it. The fries, beef tallow, of course, come on the side. So I don't know. I think people are going to get over it. They're going to not go for the food necessarily. But if you can create a world where people with electric cars do go and actually spend money on food, I think that's a good thing. I think that's a really good idea. I'm surprised that Starbucks didn't do this way back when, which brings us to Starbucks. Tell us about what Starbucks is doing, Jonathan.
I mean, the question, Lisa, really is what Starbucks isn't doing. I mean, the thing I like covering Starbucks, one of them anyway, is that it certainly these days, and really most of the time, there is just no shortage of something to write about. They usually say something really interesting, but they did a lot. The biggest thing, the headline really was, same-store sales declined again, 2% in the U.S., the 6th straight time they've done that. That was the longest negative streak since 2009. And you really kind of got heavy vibes that it's probably going to run a 7th straight negative quarter, I would imagine. I think, given some various comparative issues and stuff of that nature, I mean, maybe they go flattish. They were not overly bullish about the immediate future because of pricing issues and stuff of that nature. But the comparisons do get easy. So we'll see. Traffic down 4%. Again, continuing, been kind of an issue, but they did show some signs of progress. Some of their scores are up with consumers and with employees. The biggest real positive sign that I took from the whole call was that their business with occasional customers has returned. Or it started to grow again. So it's been negative really since the post-pandemic recovery period. And so it's really been negative for a lot longer than we thought. But that's been kind of their biggest weakness, at least early on, was they lost a lot of customers who were not members of their loyalty program. And so they're starting to return. And if they're starting to return, it means that Starbucks is doing a better job of marketing itself beyond just as loyalty members. They're going away from discounts with the loyalty program as well, really kind of undoing significant changes under previous management. So Starbucks always been a premium brand, I think. I mean, really, it's always portrayed itself as a more premium brand, but in recent years, it's really done a lot of things that lower cost brands like McDonald's or Dunkin' or whatever have done. But really, has always portrayed itself as a more premium brand. And I think that's what Howard Schultz views it as. But they've been doing too many things that really reflect a brand that is just trying to get in, get out, all that other stuff. So they're going away from discounts on loyalty programs, and it's those discount customers that they're losing right now. So it's not the worst thing on the planet for them to be getting a decline if that's who they're losing. There are a number of other things that they've got coming up. They're returning seats. They're ending their seatless restaurant, their pickup only locations that they
pro-chair.
Yeah, I am pro-chair. I am completely with you. I mean, I think really if we just kind of boil it down to what Starbucks is doing is that they're going back to their roots, but they're not just overtly trying to compete with all of these drive-through coffee concepts or anything like that. They are going back to who they are. I think that's generally a good thing. I really do. I mean, at the end of the day, look, I mean, you make more money over time by serving the takeout customer. But at the end of the day, Starbucks has always been about you go in and you sit down, you enjoy a cup of coffee. And even if you want to go in work, you want to enjoy a cup of coffee, you have a couple hours to burn, you have your computer, you just go in, you get a cup of coffee, you get some other drink, and then you sit there for a couple of hours. But the thing is and you want that there. I think you want that there, even if customers are only going in for mobile order or even drive through. And I think that we've kind of learned that the customer wants you to be who you are, and you can't ignore that customer. You kind of can't, even if it's not as big a percentage of your business as it used to be. So I think that's interesting. By the way, they're also selling a lot more cold foam. Cold foam's suddenly that is as popular. I didn't realize that Starbucks. One thing about Starbucks is how many beverages in the United States that we drink today were popularized by Starbucks.
For sure, yeah.
Cold coffee was popularized.
And just all these drinks with all the flavorings and the mix-ins and the syrups and all that, that's really Starbucks. It's
a Starbucks creation. It really is.
People have said that the dirty soda trend is cutting into Starbucks business, but I don't really see necessarily that as the same customer, although you could say that, that Starbucks started it kind of.
I mean, they did start this trend. I think that there is something to it. No, I mean, Starbucks suddenly didn't lose just like all those customers to Swig, right? I don't think that really happened. I really don't. But I think that what you do have is this generation of concepts that are taking some share by offering customized beverages in a different sort of wrapping, and that's really been where a lot of Starbucks customer growth has been over the past few years. But yeah, I mean, it did come from it. I mean, just as big as Swig is at this particular point, it is a drop in the bucket. I mean, compared to Starbucks, it's a really good LTO.
But it's not just Swig though. I mean, the dirty soda encompasses any sort of, sweet drinks with lots of stuff in it, which, everyone now is doing. So it's certainly not them, but they wouldn't explain the sales slide that you just described, which was started long before that was popular.
No. It doesn't, not fully. Yeah.
What I think is interesting is what you have written about looking at the loyalty program and just the whole notion of what discounts do when you have a program that's based on discounts, which, so many chains do. It really can actually hurt you in the end, in the long run. And now the companies are really forced to think about how else can they run these programs where they still get people to, they want to drive traffic. How are they going to get them in without discounting? And they've got to think about new creative ways. There's so many programs out there. There's a lot more competition in the loyalty space.
Yeah.
So that's what I think is going to be interesting.
No, it's a really good point. And the thing is, like what you're referring to is that Starbucks is going away from those discounts and they're reconfiguring their loyalty program next year, really to focus on what Brian Niccol thinks a loyalty program should be. And I generally agree with him, especially for the company like Starbucks. You want to feel like you're something special if you are a loyal customer. But what he says, it's too much of a one size fits all discounting strategy.
Right.
And I'll tell you, from my perspective, most loyalty programs in the restaurant business today are discounting programs for the most part. That's basically it. Subway uses heavy amounts of discounts to get customers to its loyalty program. Franchisees have been really mad about that. It's McDonald's, same thing. Most fast food brands, most restaurant brands really use a lot of incentives to get customers onto loyalty programs. And those incentives are usually some sort of discount that are available on the app. And I think that more restaurant programs should focus on that sort of reward thing. Like I'm a Delta customer and I use Delta and one of the big reasons why I'm on that loyalty program as aggressively as I am is because I want to get upgraded on occasion.
And that lounge, you love that lounge.
Well, the lounge is important because I have to do some work a lot, like I usually do in Starbucks locations. But in the lounge, I'm going to get better Wi-Fi and I'm going to have an outlet. Which you can't, by the way, always get at Starbucks locations these days because they killed the outlets, Lisa, which is wrong.
And the chairs.
Anyway, speaking of earnings, Wingstop.
Yes.
A rare thing happened with Wingstop. What?
Well, their same-store sales actually went down 1.9% in the second quarter. It's the first time in 3 years and only the third time since they went public in 2015, as you noted, which, after flying pretty high, it was a bit of a jolt. But there's a big but with this one. They had a very tough comparison in this quarter. So a year ago, they did 28.7% same-store sales increase, which is just astonishing. At a time when a lot of other companies were also saying, that it was a tough macroeconomic climate. So they're up against that. So, really their 2-year same-store sales increase is still over 25%. So that's pretty good. And what was most interesting about this, though, is that the company units, which are mostly operated around Dallas, all have this new smart kitchen, which I've written about, this new digital operating system that basically moves them away from paper tickets, to a digital system that they're rolling out this year. All of the stores will have them by the end of the year. Those units, the company units, were up 3.6%. So, that really says something about how well this new smart kitchen system is working. And the company is very high on the results and the fact that this is going to be in all stores. It's in 1,000 stores system wide so far. And then by the end of the year, all of them. And so they were, they're going to be opening more restaurants. Franchisees are thrilled with their returns. Overall, it was pretty exuberant considering the fact that their same-store sales were down for Wingstop.
I want to chat briefly about those comparisons because 28.7% actually does not really do the whole thing justice. They were comparing themselves. In reality, they're kind of coming down at 45.5% 2-year number. So their 2-year numbers last year at points last year were hitting completely unsustainable levels. And in reality, this is kind of what a number of chains are going to face because we've had a number of chains pop with unbelievable same-store sales numbers. We got like Cava, Wingstop, Chili's. And a lot of these companies are really going to have a hard time comparing themselves to that without absent something else. And that's fine. Wall Street thinks of it as like, Wall Street is always looking for this constant growth, and and a lot of times companies get punished. Wingstop, by the way, I think there was some expectations that they would be worse, oddly enough. So a lot of it's based on what they're expecting versus what reality is. But they had, Wingstop's 2024 was unbelievable, and their 23 was unbelievable. And this was not with any sort of pandemic boost or anything like that. The chicken sandwiches did really well. And, they had, and other products also did really well. And so it was really, really good. And it's just at the end of the day, it's really tough. It's also a really tough environment, frankly. They also mentioned Hispanics, if I'm not mistaken. And Hispanics, the market in Hispanic heavy communities are depressed right now, frankly, from a labor front and a sales front. And that's definitely something to watch out for. So he talked about that as well, which I thought was very notable.
Yeah, but it will be interesting that they are expecting that same store sales will grow. And, the company same store sales increase was based largely on transactions. So they're expecting a pretty good second half of the year. But that softness with the low income consumers that are mostly Hispanic was something they mentioned in the first quarter as well. And, I think that we've talked about this before. It could also have to do with the climate in immigrant communities in particular. There's a lot of fear out there. So we'll see what happens.
Yeah, we will see what happens. But I am generally pro improving operations in the kitchen. Improving speed is the best way to improve transactions at the end of the day. We'll see if that continues to work. But that's, when you've got an evolving business the way Wingstop does, you really do need to improve the back of the house. And we do see a number of chains. I think Popeyes is doing something very similar, proving, make kitchen improvements, make operations improvements, and then usually sales follow as long as you do that right. All right, superb. Coming up later on, we got senior technology editor Joe Guszkowski with Tech Check. But first, whatever ad Spoons plans to run next.
Are you looking for a new podcast that provides practical tips for running your restaurant business? Do you want to hear from the food service world's most influential decision makers? Then go subscribe to my podcast, Takeaway with Sam Okus, which features everyone from the CEOs of the biggest restaurant chains to the leaders of small but mighty emerging brands. At the end of each interview, I provide my takeaways from the discussion, giving you actionable insights that you can take with you on the go. Go subscribe to Takeaway with Sam Okus wherever you listen to podcasts.
Hello and welcome to Tech Check, where I, Joe Guszkowski, talk really fast about one big topic in restaurant tech. This week, who said tech and hospitality can't mix? Bojangles, the southern chicken chain, gave us a great example of how tech can enhance the customer experience in a unique way this week. The chain's AI drive-thru voice bot, which it calls Belinda, now speaks Spanish in about 400 locations. Bojangles said this will help expand access to Bojangles, or Bojangles, for Spanish-speaking customers. It's a smart use of technology because there's really no analog solution for the issue of bilingual ordering, even though there's a great need for it. According to census data, nearly 14% of Americans speak Spanish at home, and Belinda gives Bojangles a reliable way to serve those customers in their preferred language. This is not only innovative, but also a smart business move, especially as Bojangles prepares to expand into markets with large Hispanic populations, such as Las Vegas, Phoenix, and Southern California. The chain said it's already seeing about 200 Spanish orders a week with the capability in select locations, and expects to see that number grow as Spanish comes to more restaurants.
And that should do it for The Week in Restaurants, which was edited, as always, by Spoons. Artwork by Nico Hines. You may find this and other episodes of the podcast on our website at restaurantbusinessonline.com, but please subscribe on Apple Podcasts or Spotify. I'm Jonathan Mays, editor-in-chief of Restaurant Business. For Lisa Jennings, thank you for listening.